The iPhone shipment in China is higher than expected. Due to labor protests last November, the Zhengzhou iPhone factory shipped about 12 million fewer iPhones 14 Pro and Pro Max units, resulting in a lower revenue baseline for 4Q22. Nonetheless, Apple predicted its 4Q23 revenue to be similar to 4Q22, suggesting that Apple 4Q23 momentum is weaker than expected primarily due to decline in iPhone demand in Chinese market. Looking ahead to 2024, the downward trend for iPhones in China will continue, indicating a structural equals change in the Chinese smartphone market due to Huawei's return. Apple Incorporated (AAPL) is experiencing a decline in sales in the Chinese market, opening up opportunities for local Android smartphone manufacturers to gain favor among customers and investors. One such company seizing this opportunity is Xiaomi Corp. 1810, which has witnessed a remarkable increase in market value of approximately $20 billion since hitting a low point in June. This surge is largely due to the excitement surrounding Xiaomi's latest smartphone release, as well as its ventures into electric vehicles and other businesses. Over the past few months, Xiaomi's Hong Kong-listed stock has risen by more than 60%, establishing it as the top performer on the Hang Seng Tech Index. This success story is part of a broader trend where Chinese Android smartphone makers are capitalizing on Apple's declining revenue in China. This comes even as there are signs that the Chinese smartphone market, the largest in Asia, may be beginning to stabilize after several years of decline. Xiaomi's 14 series of smartphones, launched in late October, has already received over 1 million orders, marking yet another successful debut for a Chinese smartphone. Following Huawei Technologies Co.'s success with the Mate 60 Pro, Huawei suppliers have also been benefiting from this resurgence. While Xiaomi's stock has seen substantial growth due to the strong performance of the 14 series, some analysts believe it has the potential for even greater gains. Factors contributing to this optimism include the growth in smartphone and artificial intelligence of things (AIoT) sectors, as well as the anticipation of Xiaomi's entry into the electric vehicle market. Analysts like Gokul Hariharan from JP Morgan Chase & Co. suggest that there is a trading opportunity in the coming 6 months with a turnaround in smartphone and AIoT growth and the early expectations surrounding Xiaomi's electric vehicle venture. Notably, other Wall Street firms, including Morgan Stanley and Citigroup Incorporated, have also recognized signs of a recovery in the Chinese smartphone market, with Huawei's strong comeback playing a crucial role in boosting consumer interest in innovative local products. Huawei's unique camera function and satellite calling features have gained rapid popularity. In contrast, iPhone sales are losing momentum in China as consumers perceive limited functionality improvements in the new models. Xiaomi's 14 series boasts an advanced camera, the latest Qualcomm-incorporated processor, and an innovative operating system called HyperOS, designed to seamlessly connect the smartphone with automobiles, appliances, and other AIoT devices. While Huawei is expected to gain the most market share among Chinese brands in the current smartphone cycle, Xiaomi's technology is likely to help it stay ahead of competitors like Oppo and Vivo into the next year. Furthermore, Xiaomi's strong overseas presence positions it favorably for potential growth in international markets. Despite Xiaomi's impressive stock rally following the 14 series launch, technical indicators suggest that the shares have entered overbought territory. However, market observers anticipate further momentum driven by upcoming catalysts, including Singles Day and the release of third-quarter results on November 20. Xiaomi stands out as the only top 5 smartphone brand to experience shipment increases both quarter-on-quarter and year-on-year in the third quarter of 2023. The company achieved a historical high in gross merchandise value on Singles Day, largely attributed to the strong performance of the 14 series, as noted by Goldman Sachs Group Incorporated analyst Timothy Moe. Additionally, there are alternative ways to leverage this trend, as Xiaomi, much like Apple and Huawei, has developed its own ecosystem of suppliers. Key component makers for Xiaomi, such as mainland-listed Will Semiconductor Co. 603501 and OFILM Group Co. 002456, have both seen their stock prices rise in the past month. Please like, share, and subscribe for more.